Hey, Eric here. And with Google just announced its earnings an hour ago, I thought it would be quite interesting to walk you through how I look at the earnings report, why Google earnings is so bad, and why the stock dropped so significantly after hours. So it will quickly help you understand why that is the case, and then you can make your decision to forecast whether Google will be performing better or worse in the future. And this is a warning to the digital ad space because we're seeing a trend here for Snapchat, which declined 28% after earnings. And now Google is going down in after hours as we speak for earnings as well. So let's dive into the computer and I'll walk you through this process. So Eric here, and let's use the CPA accounting lens to look at Google's earnings today. So as we speak, let me just pull up the chart for Google. Here, you'll see that initially, before the market closed, it was $104 and it dropped to $97 as we speak. So it's actually quite a significant drop. So let's look at the earnings to quickly find out why. Now, of course, you can read the initial paragraph, which tells you what the CEO is thinking. But in our case, we're just going to skip over that. It's not that important. Now, when I'm looking at Google's earnings this time, there are two important things we need to look at. The first one is the revenues. Now, when you're thinking about the digital ad space right now, we're really in the post-pandemic world, and in Investing Accelerator, we talk about that a lot. People are going back out to traveling. So you'll see a lot of travel-related businesses thriving again. Airlines are hiring, and UAL after earnings has gone up as well. So when you're looking at the digital ad space, well, you need to think there's actually less demand for digital ads. And me as a YouTuber myself, and I also run some YouTube ads, I know that I'm not running as many YouTube ads because I'm actually not in a hurry to run as many advertisements at the moment. So you might have seen some of them having that you have gone to my channel right now. So let's look at revenue. So first of all, here you can see last year, September, it's $65 billion. And then this year, September, is $69 billion. Now, looking at this at a first glance, it seems like it's good, right? It's increasing. But if you compare that using the change of revenue year over year, this number means that it compares the 2021 September revenue with 2020 September revenue, and the increase was 41% last year. Now, if you look at the 2022 year over year increase, then it's 6% this year. So it's the 65 to 69, that is a 6% increase, which then if you think about it, it's actually not that much. And for a strong company like Google, this is actually a significant slowdown. That's why if you have been tracking Google and its company's news over time, you'll realize that they're actually freezing hiring and they're potentially cutting some people that are underperformers. And they did that actually before this earnings because they knew there isn't as much business, so they can't grow as quickly. The economy is slowing down. So then now you see the financial result for it. Great. Now, another thing I want to look at when you're looking at earnings is actually comparing the June quarter with the September quarter. Now, you might be thinking about this and go like, hey, there's actually seasonality with Google, which I do agree with you. And there's usually seasonality around December because during December time, there's more shopping, more people are running ads. So it kind of makes sense. So if you compare June to September, the seasonality effect isn't as strong. And usually when you're looking at recurring subscription type businesses, then there shouldn't be as much seasonality as well. So for a really strong growth company, when you're looking between the quarters, they should be growing as well. So usually for seasonality, it's really for cyclical business like Christmas or retail that drive up the demand during the fourth quarter. But then other than that, usually I would expect a quarter over quarter within the same year to be increasing as well. So then the question is, well, what is the June revenue for Google? So let me just bring you to the Q2 earnings report. And here you can see that if I scroll back up, it's 69.68, which is the number you're looking for here. And if I go to the September one, it's actually a decline in revenue. Now, this is important because Google historically is very strong, and when you're looking at tech companies that have a very strong growth, they can almost grow every single quarter. And this is why there is a slowdown in the economy, and you can see that from Google's results alone. Now, the next thing I look at is the net income. So if I go down here and I look at net income, And you can see that for quarter 2021, it used to be 18 billion, and then now it's 13.9. Now, usually for a growing, profitable company, the net income should be growing as well. Now, we can give Google a little bit leeway here because last year was a pandemic year, and obviously people stayed home and run a lot more ads to shop online or whatnot. So then last year's profit is higher. But nevertheless, Wall Street is going to penalize Google for having a lower profit. And that's actually what's important, and that's actually what's driving the stock price. So until they get the year over year quarter net income comparison to be increasing again, Google is going to have some pain and the stock price will be choppy, or it might even be going down like what you're seeing on the right hand side right now. Now let's do the comparison with last quarter as well. And here you'll see that's the net income was 16 billion as of June. So if I go down to here compared to the 13.9 as of September, it is also a decline as well. So that actually just goes to show how bad the earnings is for Google. And if you have a quarter over quarter decline, you have a year over year decline, it totally makes sense that the stock price is going down. And that's what you see in the after hours, that it went from $104 to $97. I'm actually going through this earnings report very quickly. If you're doing a deep dive fundamental analysis like I do in Investing Accelerator, then we'll also look at some additional details within the financial statements, so then we're more in depth. But nevertheless, let's go down. Now, one of the things you might be wondering is, well, the YouTube ad revenue isn't that high, or isn't as high as Wall Street expected. And this actually totally makes sense to me, because me as a YouTuber running YouTube ads, I know I actually don't have as much demand to run Google ads, and I'm trying different platforms as well because other platforms are offering me lower cost of ads compared to Google. And I actually worked with some Google ads representatives before, then obviously they tried to increase my ad spend as much as possible. So then they increased their revenue number, which is what you see on this earnings. But the reality is it wasn't that effective. So in the end, I actually ramped up my ad spend for a couple of months, but then I quickly decreased it because I just wasn't seeing the results. Let's compare the YouTube ad revenue, because that's what Wall Street is penalizing Google for this quarter. So last year, September, it was 7.2 billion. And then this year is 7 billion. So that is one of the negative events. Now, if you compare to June, then here you can see it used to be 7.3 billion in June, and now it's 7.0 billion. So you can see it's also a decline. So I think the decline of Google stock price today, after hours, completely makes sense. And looking at the next couple of weeks, for any other ad platforms, I would be very careful as well, because as we step into the post-pandemic world and people are going out traveling more, going to Paris, Greece, or whatnot, there's going to be less demand for digital advertising. And we can see that with Snapchat, we see that with Google. So it's actually not a company-specific problem, it's actually an industry problem. So what's going to be interesting is when you look at Facebook advertising and Facebook ad revenue coming up for its earnings. So if you're wondering, Facebook earnings is coming up October 26th. So we'll see how that one goes. But right now, my view is pretty bearish on Facebook. So looking at Google, looking at Snapchat, we have a pretty good feeling of what it's going to be like for Facebook tomorrow. So that is really a quick and dirty earnings analysis for Google that I did within 7-8 minutes. And that's some of the shortcuts we use within Investing Accelerator when it comes to fundamental analysis. And that's why fundamental analysis is so important, because when you're just looking at technical analysis, let me bring you back to the chart here, you can get this template. You can set up the charts to look exactly like mine in the free webinar below, but it's not going to tell you why the stock price suddenly declined from 104 to 97. And before this earnings release, we have been tracking Google quite closely. So we have a pretty good idea that this earnings is not going to be good. So we need to prepare for it. So within Investing Accelerator, we would exit some of our position to enter at a lower price. We would hedge to reduce our costs. So there are a lot of different strategies you can employ when the market is going down to reduce your loss and or make some profit along the way. So that's what we do in Investing Accelerator for the long-term investing strategy. So this earnings is going to be bumpy. November 2nd is going to be interest rate increase. November 8th is going to be election. So those are two events that you need to pay attention to as an investor as well. So if you like this video, give me a like, and I hope you have a wonderful day.